Chinese stocks finally caught the break that investors have been praying for. The benchmark Hang Seng Index in November rebounded 27% off its 2009 lows seen at the end of October. The rebound, sparked by China's COVID easing measures, led Macquarie's core warrants tracking Chinese shares to finally make some positive returns.
Hi, I'm Jamie from Macquarie Warrants, and I'm here to share with you some highlights of the market action last month and how you could have used warrants to capture some of these moves.
In last month's commentary video, we mentioned how put warrants had soared further as Hong Kong and Chinese shares had traded to fresh lows on the last day of October. Many of the stocks and the benchmark Hang Seng Index were at its lowest since 2009. In the month of November, however, many of the same names experienced a long-awaited rebound after COVID-related curbs were removed in major Chinese cities. As China sets the stage towards reopening, companies that would benefit from a reopening, such as Sands China, rallied 53.3% to finish as one of the top index performers on the Hang Seng Index, which was 26.6% higher. Given the strong performances of both underlyings, Macquarie's core warrant spiked as much as 28 times more, with the Hang Seng core warrant jumping 754.5% from 1.1 cents to 9.4 cents, while the core warrant over Sands China climbed 481.8% from 1.1 cents to 6.4 cents. Hang Seng put warrant HYPW fell 94.1% from 29 cents to 1.7 cents. In our last video commentary, we also mentioned that investors should look for potential moves from Chinese tech companies that were reporting their earnings in November. And indeed, amongst the tech companies that did so, JD.com and Tencent outperformed the broad Hang Seng Tech Index's 33.2% jump. The core warrants tracking JD.com, 5J8W, soared 480% from half a cent to 9.1 cents, as JD.com rose 50.8%, while Tencent Core ZESW was up 375%, with Tencent shares up 39.7%. The put warrants tracking both stocks was down 73%, while Hang Seng Tech put warrant USEW was down 49%. The ability for warrants to make magnified moves given a small investment capital outlay is one of the top reasons why investors will consider using warrants to trade short-term volatility in the markets. The magnified moves, both positive and negative, you see in the core warrants versus their respective underlying prices are due to the effective gearing feature embedded in warrants. The magnitude of the warrant price change is in turn dependent on the respective effective gearing levels of the warrants. How much more warrants move given a move in the underlying price in the short term depends on their respective effective gearing levels. Generally, you can use the effective gearing level multiplied by the underlying share or index move to estimate the percentage change on the corresponding warrant. You can find the effective gearing levels for each warrant in the warrant search table of our website. As we enter into the last month of 2022, markets look set to be driven by further updates from China on the extent of COVID easing. Inflationary data from the US, another driver of markets this year alongside Fed hikes, will also continue to impact market moves in the month of December, with the release of US CPI data on the night of 13 December. It might provide more clues on whether the Fed may start easing rate hikes as hinted in their November FOMC minutes. Investors who believe that the market will head higher for a Christmas rally may consider buying core warrants, while those worried about a pullback from the November rebound may consider put warrants. They are all available at our website www.warrants.com.sg. You may also contact us at our warrant hotline at 6601-0289. Finally, don't miss out on timely warrant news, as well as warrant investment ideas by scanning the QR codes in blue to join our Telegram channel. Looking forward to speaking to you again next year. Have a merry and hopefully prosperous Christmas.